So let's take a minute to talk about mortgages for foreigners that want to invest in real estate in the US. This is something I've been dealing with for 10 years. I'm a foreigner. I own rental properties in the US. I've been doing that since 2016. And we also help other foreigners build rental property portfolios. And we use mortgages a lot. We have some great lenders that we work with. But the type of mortgage that you get as a foreigner and the terms that you get are going to be a little bit different to what you would find if you're a US citizen with a social security number, a fixed US address, and good credit. So you'll have seen on kind of YouTube and the internet people talking about FHA loans and 5% down loans and 10% down loans, and they're really for Americans. As a foreigner, initially you're not going to get access to that kind of lending product. But there are four types of mortgages that we use or have used to acquire real estate in the US. And the type of loan that you use really should align with your investment strategy. So I'll cover them in this video. We'll go through them pretty quick just so you see exactly what's available. And if you want more help with looking for a mortgage as a foreigner, write something in the comments and I'll hook you up with our lenders and brokers that are going to be able to help you, that help our clients build their rental property portfolios in the US. So the first loan to look at is the most expensive, and it's for a very specific use, and that's private and hard money. The two are kind of interchangeable. It's a non-bank lender, right? So it's a private individual or a small business that loans money specifically to real estate investors. They're very, very high interest loans. They can be up to 15% annual interest. They're very short term, usually for 3, 6, 9, or 12 months maximum. And those kind of loans are suitable really only if you're doing a house flip or a BRRRR project, a buy, renovate, rent, refinance, repeat kind of investment strategy. It's a way to get easy capital. Those lenders will lend where the bank won't. So you can use hard money or private money to buy ugly houses or houses that need a lot of renovation and to fund the renovation as well. You'll typically be able to borrow about 80% of the purchase price, and they'll also lend up to 100% of the renovation costs as well. But there will be upfront fees. There could be up to 5% of the loan amount as upfront fees in what they call points, which is upfront interest that the hard and private money lender will charge. And the interest rate, as I say, can be up to 15%. And if you don't finish your project on time, if you're buying a renovation project and you've got a 6-month hard money loan and that project overruns on time or cost, you're going to come unstuck and that lender's going to take that property off you. We see that a lot with people kind of biting off more than they can chew and not really understanding the realities of those kinds of projects. So that's number one, hard money and private money. Number two is the most common loan that we use. I've got a lot of these loans and all of our clients use these to buy their rental properties in the US, and that's a DSCR loan. It stands for debt service coverage ratio, and that is where it's a non-bank lender. So it's a private lender technically, but it's an institution. They generally have a mortgage lending license, and they will lend foreigners up to 70% of the purchase price or appraised value, whichever is the lower of those two, for the purchase of a cash flowing rental property. Now, typically the DSCR ratio is simply the amount of rent as a ratio against the operating cost, which is principal, interest, taxes, and insurance, and if it has one, a homeowners association. So the fixed costs associated. What the lender's looking for is that rental income is bigger than those fixed costs. If it's exactly the same, it'll be a ratio of 1 to 1, so a ratio of 1. If the rent is 25% higher than those operating costs, it'll have a DSCR ratio of 1.25. And the higher the DSCR ratio, the better terms you'll get as a borrower. And typically lenders are looking for a DSCR of 1 or higher. Most lenders will start to allow you to access better terms if the DSCR ratio is 1.25. We use DSCR loans for all of our own rental properties. There are no credit checks. You don't have to be an American citizen. You don't have to have a social security number or a fixed US address, and you don't have to have US credit. You don't even have to prove your foreign income. All you'll have to prove is the property has the right valuation, so the lender's going to get an appraisal, and the rental income is correct. They're going to check the rent roll and banking to make sure the tenant's paying their rent, and that's pretty much it in terms of the mortgage underwriting. They're not looking at the borrower, they're looking at the property, and that's why those loans are so good for us foreigners, because we don't have to go through the underwriting process as a borrower in order to access that kind of funding. And there's also no limits on the upper end, so you can have as many of those loans as you like. Now, most DSCR lenders will require a minimum loan balance of $100,000 and a maximum loan to value of 70% for foreigners. So you're going to be looking at properties, rental properties, with a fully finished value, so all cleaned up, stabilized market rents of at least $150,000 in order to meet the minimums for most of the lenders. There are lots of lenders that offer those kind of products to foreigners, but we only work with one lender really, because they have a much better process that's actually designed for foreigners. So you can sign for the mortgage remotely, you don't have to visit the US, and they have an online platform for documentation uploads. Really good system. So we use those loans a lot. The next kind of loan is a full documentation loan. Now that is typically more appropriate if you're buying a holiday home or a vacation home in the US, and that is where the lender will underwrite you as the borrower. So it's a very similar kind of loan product that you would find for US citizens. They're going to look at your credit, they're going to look at your assets, they're going to look at your income, on all of that stuff. You get probably better terms than a DSCR loan. You'll get a slightly lower interest rate, and you might get a slightly higher loan to value. You might get up to 75% loan to value, even possibly 80% as a foreign national. But those loans are much more difficult to access as foreigners because of that underwriting process. You really have to have your house in order and all of your documentation correct. It's a really onerous process, and the DSCR loan is a much better option in my opinion. But those full documentation options do exist. And then we have to look at an ITIN loan. If you already do business in the US and you have an ITIN number and you file a US tax return, an ITIN number is the foreigner's equivalent to a social security number. It's your tax identifier number. If you have an ITIN number, you filed US tax returns, and you can prove US income, then you can use that US income for an ITIN loan. And again, you'll get slightly better terms, but the underwriting is based on the borrower and the property, not just the property. So to recap, we've got hard and private money for fix and flip projects, renovation projects. We've got DSCR loans for rental properties. That's my personal favorite. We've got a lot of those loans outstanding ourselves. Then you've got full documentation loans if you're buying a holiday home or a vacation home, something like that. And then ITIN loans if you already have US source income. If you're struggling to find or access financing for your US real estate investment, you can drop a comment or contact us through here, and I'll be happy to connect you with our lenders. If you'd like help looking for US rental properties, that's certainly something we can help you with also. So if this video was useful, drop a comment, like, subscribe, and follow us for more content based on our experience of 10 years investing in the US real estate market as investors and landlords.